Are you moving to Raleigh, North Carolina?
Is a market shift happening?
Well, it might be happening. What do you guys think? Is there a market shift happening in Raleigh, North Carolina, or is there not a market shift happening? There's a lot of contradictory discussions out there. You can see the news, you can see the pricing is going higher, the rates are increasing, the feds are trying to decrease inflation. So what is actually happening in Raleigh?
Are we in a recession?
Are we in a recession? We could be. The GDP definitely was lower than the first quarter. So what is happening, you guys, is this. By the way, I'm Yoana. I have been a real estate broker for 10 years, and this is Johan Alvarez with Altera Home Loans. We want to give you a very in-depth insight of the Raleigh market. And the reason I say the Raleigh market is because real estate is super local, and yes, there are people coming here all the time, and yes, there will be people buying homes all the time. However, there's a lot of people saying that there's a crash, there's a shift, which, you know what, everybody needed a little bit of a shift and normalization of the market because it was absolutely out of control. So what we're gonna do is we are going to break this video into 3 little chapters for you. We have plenty of notes because yes, we do our research weekly, and yes, we do post videos weekly. So by the way, check out our other videos on neighborhoods, on affordability and all of that in Raleigh, Cary, and all of that great area here in North Carolina. But we do our research, so listen to specialists when it comes to deciding whether or not it is time to buy a house or not. Because if you're just gonna listen to whatever is happening in Hawaii or to California, guess what? The market is completely different. So you might end up renting for $2,000 a month instead of buying a home, staying with the home. What is that? What is that?
Marry the home,
Marry
date the
the
rate.
home and date the rate. Remember this, because you will thank us, and hundreds of our clients do thank us every day because we advise them properly. So let's break this video into 3 short videos, and the first one is going to be inventory and what's happening with the home prices. So it's going to be very short, but I do have the news for you. So this is just for the Greater Triangle area. The inventory was up 34.2% in June from May of 2022. Now, I still don't have the actual numbers for July, but this is what happened. So that's a pretty good steady inventory there. So this is very good news for you guys, for all the home buyers, and also, you know, home sellers that are considering downsizing, buying another house. Finally, there's a little bit more housing out there, and you know, we do see increased days on the market. The house prices, median sales was up 17.8%, while average price reached about $483,000. And this is all from last June. So this is not from May, but when you look at what happened from June to June, we already reached $483,000 in average price. So when you look at these numbers, Johan here has a little bit of a spreadsheet with what we can at least just generally look at when it comes to buying a house. What do you have, Johan? You have the 450 or?
I have a few examples here. So I have one at 491,
Okay.
724, which was an interesting number, but that's the average sales price in Wake County. So that's
Right.
county
Yes,
based.
so just the Wake County.
So 491,724 with 20% down. Just wanted to figure out what a monthly payment could be and how much money would an average person need, right, for this price point. So assuming that interest rates are at 5.5, which rates are somewhere around there, right, low mid 5s right now, we can expect a payment of about $2,600 to $2,700 a month.
Okay.
And you'll need about 100,000, 110,000, somewhere around there to be able to purchase this price home. The interesting thing though is that as far as income, depending on if you have debt or don't have any debt, you need to at least make $75,000 a year to be able to afford a home that's in the average price point in the county of Wake County.
Yeah, so a family with two incomes of $70,000, $80,000 or $80,000 or so can easily afford a $500,000 home with 20% down, right? So if you need more information on a 5% down payment or so on, you can definitely connect with Johan. I do have other stats on that as well. So this is so far what's happening with the inventory and what's happening with the home prices, okay? The next chapter that we're going to touch a little bit for you is rates. So you understand what's happening with the rates and why are we asking you whether or not you think there's a market shift, and if there's a market shift, how does that look like from our perspective? So Johan, rates. I know that at some point they were very high, then they dropped in August. So give us a little bit of a just a summary of what actually happened with the rates from June to now.
Yeah, so, well, first of all, let's remember that rates were at its all-time low during the pandemic.
Pandemic is what drove the rates low.
Right, so that's what kind of spurred all of this demand and migration, people working from home, right? So a lot going on in the last 2.5 years. But the fact of the matter is that starting in January up until now, we've seen rates raise at the highest levels that we've seen even before COVID and
right.
close to what they were back in 2008 during the recession at that time.
Right.
You know, with this level of 5.5%, 6%. So we saw them get up to 6% earlier in July, and they started to come back down. And now lately, the last few days after the jobs report number that came out last Friday, we're seeing them starting to tick back up, but kind of holding off at this level. So we can expect rates to be somewhere between 5 and 6 in the near term.
Right, and remember why is that happening?
Yeah, because you know the Fed
was buying.
Increased for the fourth time this year. They were buying a lot of mortgage-backed securities during the pandemic to stimulate the economy.
Targeting real estate, right?
Definitely targeting real estate. They were
right.
purchasing at high levels because other investors really weren't purchasing these mortgage-backed securities. They were really the only investor. Well, now they're really focused on taming inflation. They want to reduce inflation because everyone has seen gas prices, right? I mean,
yes.
just the cost of housing,
yes.
cost of everything going up.
Right.
So that's their biggest concern, and they're really focused on reducing inflation. So now they're increasing rates. They've already increased them 4 times this year. They went from 0 to the target range, which is between 2.25, 2.5%. Mm-hmm. Now, it doesn't mean that mortgage rates, as the federal funds rate increases, mortgage rates are going to also increase. Because mortgage rates are determined by other factors like mortgage-backed security, the mortgage-backed security market. But in the near future, we're seeing that interest rates are going to continue to increase.
Yeah, so as they're trying to get rid of their debt holdings, they are going to have another meeting in September. We could potentially see the rates increase. But you know, just like Johan said, you never know, especially
right.
with the war. Their main priority is to reduce inflation, but then, you know, like Johan said in one of our discussions, they're more concerned about the inflation than about the recession.
Right.
At this point, you really want to drop that, okay? So this is what's happening right now with the rates, so you can understand the back end and what we're looking at on a daily basis. And the third part of our video is affordability. So what's happening? Let me tell you this. If you had bought a house in January, you would have paid $774 less with a 5% down payment on a just median sale house here, priced home. So that is what's happening.
So there's a cost of waiting.
There's a cost of waiting, you guys. Again, right? Marry the
home, date the rate.
You're gonna think we're crazy because we keep on saying this thing, but it's very true. The good news regarding affordability is that the home pricing is not 25% more than last year. The projection is about 9% or so. Let's just say 8%. It's right there. Again, it's local, but national it's about 9%. So that's the very good news. So overall, is there a market shift? Is there not a market shift happening? Are we in a recession? Are we gonna be in a recession? This is all kind of debatable. The bottom line is this. The Feds are trying to cut inflation.
Yeah.
That is their priority. Is more important than recession, we feel, right? So if they cut it to 2%, which is what they're hoping to do, then the rates are also going to drop, right? So they kind of go hand in hand. This is the idea. So I think we've touched a lot, and it's important for you to understand that numbers may look different on a national scale than on a local scale. You have seen where the pricing has gone. You have seen what's happening with inflation.
Rates are still going up. I'm sorry, rentals are going up.
Oh yes.
So
big
talking
time.
about affordability, I mean, if you can't afford the rent payment, you're going to want to feel like you want to buy a home.
Absolutely. What was the price for a almost 1,000 square foot apartment was about, what was it,
$15.50. So $1.60 per square foot, and for a nicer apartment, $2+ a square foot.
Right.
And based on the research that we did, Yoana, we noticed that you can actually purchase a home in the Triangle area at $530,000.
Yeah.
For $240 a square foot.
Square foot.
And that's giving you an average space of 2,200 square feet. So very, very comparable. I think a lot of people are making this decision of, should I continue renting, or is it now the time to purchase a home?
They're renting, and your rent is not going to be a fixed rent for 30 years. That's actually never happened in history, right? So if you're going to rent now for $2,000, next year you might pay 23 or so. I had a client, true story, a vet. I can give you her information, and she said right before she bought, she said, Yoana, my landlord said that if I continue, my rent is gonna be about $800 more per month.
It's happening. I see it all the time.
$800 more.
That's the biggest reason why people are purchasing.
Exactly.
And the other thing is, I think people are afraid of paying more for the home that they're going to buy.
Yeah.
But that's what people were afraid of last year and the year before then, that they were paying more for the home that they were buying. And look at them now. Now they're thankful, that they bought that home. That home has appreciated at least 20% year over year. Now, we don't see prices going down, but we're seeing them slow, right? So that appreciation rate, like you said, is going to be 9%.
And even the people that look at the bright side, you don't have to pay $100,000, $75,000, $50,000 more on above ask price just to secure a contract. So those people who paid that 2 years ago, at this point, they're happy. They already have the equity, most of them, in their homes, depending on the neighborhood. So, they didn't wait. They took a chance. They said, right, I'm just gonna do it. I'm just gonna pay. And right now they are at 3% interest rate, 3.2%, and they are in a much better situation than the buyers that are gonna buy now if the rates are gonna be 6% on a more stable price point. So there's definitely a market change. However, you have all the reasons out there to buy a house in today's real estate market. So do not wait. Thank you, Johan.
Thanks, Yoana.
Take care.
See ya.